That big lift in the stock market, believe it or not, was driven by a lousy jobs report. Employers tapped the brakes on hiring last month, potentially signaling a slowdown in the 10-year economic expansion, which could in turn prompt the Federal Reserve to cut interest rates. And as we all know, low interest rates have been a pillar of support for the bull market. Steve Liesman has the details.
The May jobs report missing the mark by a long way and raising concerns about the economic outlook and whether the trade war is hurting the jobs market already. Just 75,000 jobs created in May. Wall Street had been forecasting 180,000. The unemployment rate remained low and unchanged at 3.6%, but wage growth rose a lukewarm 0.2%, and downward revisions to job growth in the prior 2 months reduced it by 75,000. That equaled all of the jobs created in May. On Wall Street, all the talk focused on whether the trade war was dragging down the job market. Morgan Stanley wrote, "This report will add to evidence gathered ahead of the June Fed meeting, showing that economic policy uncertainty may be increasingly weighing on growth prospects."
I think it raises the question about whether the trade uncertainty was already having some impact on the economy, prior to the latest escalation as far as Mexico is concerned. This, came after the original tweets about China, and I do think it raises that question.
The details of the report show government shed 15,000 jobs, and these are mostly state and local educational workers. Retailer, which has been losing lots of jobs every month, lost another 8,000, and manufacturing, which had been strong, grew a tepid 4,000. The week report raising the prospects that the Federal Reserve will be cutting interest rates and cutting them soon. The chance of a Fed rate cut for July, now around 80% in the Fed funds futures market, and the market is now banking on multiple Fed rate cuts this year. It's an aggressive call, one that may only hit the mark if the jobs report keeps missing the mark. For Nightly Business Report, I'm Steve Liesman.